It's like, it's like watching a counter and people coming into the room. Hi there, welcome to everybody. I'm Robert Dias, I'm the founder of ProDental CPD. We're really lucky today to have Aaron and Lillian, experts in both finance, but also they've got a very strong dental background as well. As regards questions, if you send your questions through via text, what we'll do with this one actually is we'll answer all the questions at the very end. I know some people have sent them through to us already via email. We forwarded those on, but if any specific questions, answer them on the way through. As regards CPD, we will be providing CPD for this. There's no charge for any of this whatsoever. In the next couple of days, you will get an email from us, and that will give you the link to do the feedback and get the CPD. Okay, I'm going to pass you over now to Aaron and Lily.
Okay, thank you very much, Robert. So thanks everyone for joining us today. We're going to be covering the government support measures that have been made available predominantly for dental practices as a result of the COVID-19 crisis. So we are focusing specifically on financial support and measures today. And everything we discuss will be based on guidance as of today. It's obviously a very fast moving environment at the moment. So some of this may be subject to change or clarification, but we'll be discussing our interpretation and the steps we think you should be taking as of now. So just a very quick introduction about us. My name is Lily Turnerberg and I'm a director at Berg & Williams, which is a boutique accountancy firm based in Manchester. And we specialise in dental practices and human services. I'm a chartered accountant and a chartered tax advisor, and my background is predominantly in personal and employment taxes. So I'll be taking you through the general government support packages today before Aaron moves on to dedicate that to the dental sector. So Aaron, if you want to briefly introduce yourself.
Yep, so also a director with Berg & Williams, chartered accountant by trade. I also work as a director with the West End Dental Group up in North Wales. So I have a sort of hands-on role in terms of dental business management as well as being a practicing chartered accountant, which means that I bring sort of that real experience, and I'm living and breathing some of the decisions that everybody's making in terms of keeping their dental practices sort of going during this pandemic.
Great, so before we start, we just wanted to briefly go over what we're going to be covering today and our aims. So we need to understand the current position being taken by all 4 nations in respect of the finances for NHS providers. So this is going to involve reviewing the various potential sources of government support, both from HM government and each devolved nation, and how that applies to dental practices and individual associates and clinicians. We'll discuss in detail the complexities for mixed dental practices in accessing both NHS continuity payments and wider government support, predominantly the job retention scheme. And we're also going to discuss how to forecast your financial positions and what actions you should be taking to safeguard as far as possible your business. It's very important you understand your cash flow at the current time. So the main objective of this is that you, the user, will have a better understanding of financial support available to you and your business. As Robert mentioned, we will be finishing with a Q&A, but just to run through the contents we'll be covering. So I'm going to start by giving you a summary of existing government support. And then, as I mentioned, Aaron is then going to take over and discuss what the current NHS position is in respect of all 4 devolved nations, talking about furloughing and how that applies to mixed practices, before we go into forecasting cash flow and how you should be preparing that, and we'll wrap up with some key actions to take away and a Q&A as well at the end. Okay, and just on screen now for you is our disclaimer as well. Okay, so I'm going to start by giving a quick overview of the main government support schemes that have been announced over the last month. And then, as I mentioned, Aaron will apply them specifically to dental practices and discussing the complexities for NHS and mixed practices. So we'll start with the Coronavirus Business Interruption Loan Scheme, or CBILS. So you're probably all aware of this already, but the basic details of the scheme are that it's available to UK-based businesses with an annual turnover of £45 million or less. The scheme allows for loans to be offered of up to £5 million, for which the government will guarantee 80% of the loan amount, and it will be interest-free for 12 months, although this doesn't mean capital repayments won't be payable during that time. So the intention was to encourage financial institutions to provide loans to businesses to keep them afloat during a period of economic uncertainty when banks would traditionally just shut up shop, really. As was seen, the scheme certainly had some teething problems initially, with banks rejecting applications, setting ludicrous interest rates, or requiring significant personal guarantees. And some of these issues have been addressed now. So personal guarantees will no longer be required for loans of under £250,000. And for loans above, the personal guarantee should be capped at 20%, because 80% is already guaranteed by the government. They've also specified your principal residence, so your home can't be included as a guarantee. Banks can also no longer turn down a CBILS loan if they consider a commercial loan would be viable instead, as they were previously doing. So if you have previously been turned down for a CBILS loan, you might be able to reapply following the introduction of these new rules, or you can try applying to another lender. We have seen some banks' responses that are a bit out of date and still refer to these old rules. So make sure if you do receive any rejections that they are based on the current rules that apply. So in order to apply with any of the 40 accredited lenders, try to apply online or call them directly, but do be prepared for long hold times, as well as confirming the amount you'd like to borrow and providing details on what the money is for. You may be required to provide management accounts, cash flow forecasts, a business plan, or details of your business assets. We're going to discuss cash flow forecasts in more detail later, as you should be tracking this whether or not you need it for a finance application, but the rest of the information should be fairly easy to provide. Management accounts require your bookkeeping be up to date, so speak to your accountant or use your free time to get your records in order. From what we've seen, banks are likely to want to see management accounts up to and including March 2020, so they have full oversight of the business's recent financial performance before the impact of COVID-19. So next, briefly moving on to small business grants. Grants are being made available in all 4 parts of the UK based on the rateable value for business rates. So this is only applicable to businesses that have a premises. Some of the grants are also only available to retail, leisure and hospitality businesses. So we've highlighted in yellow on the screen now which grants might be relevant to dental practices. The small business grant is fairly similar across all 4 nations. A cash grant of £10,000 is available to businesses entitled to small business rates relief, or the small business bonus scheme as it's known in Scotland. At a high level, this applies to businesses with a premises with a rateable value of less than £12,000 in Wales, £15,000 in England and Northern Ireland, and £18,000 in Scotland. Additional criteria does apply and detailed guidance has been made available on the gov.uk website. The only additional measure that may also be relevant to dental practices is the 25% business rates holiday for all businesses in Northern Ireland. In other parts of the UK, the business rates holiday is for the retail, leisure and hospitality industries only. Finally, on this one, the government did previously suggest local authorities will be in touch with eligible businesses directly, but most local authorities are now requiring applications to be made. So do check your local authority's website for details and see whether an online application form is available at the moment. Just going to briefly touch on some additional support that's available in Wales. So as you've seen on the previous page, generally the support available to devolved nations mirrors what's been announced by HM government. But it is worth mentioning that the Welsh government have additionally announced a £400 million fund known as the Economic Resilience Fund, which is to try and provide support to businesses that might not have benefited from previous support packages. So rather than based on business rates, this is based on employee numbers. As you can see on the screen, the detailed release so far suggests micro businesses employing up to 9 people could be entitled to a grant of £10,000. It's not clear yet if this includes single director limited companies, as technically a director is also their own employee, but we hope this will be clarified in due course. It does cover sole traders that have 1 other member of staff. Further grants of up to £100,000 will be available to SMEs employing between 10 and 249 people. They've also promised additional support for larger Welsh companies with more than 250 employees, but no details have been given yet on what form this might take. So details of the application process and eligibility are expected to be announced in the next week. So just watch this space if you think this might apply to you. So just moving on to the furloughing scheme, or the job retention scheme as it's known. We're going to be moving into more detail on how this applies to mixed practices a bit later, but I'm just going to give a quick recap on the basics before we do that. So the scheme allows employers to furlough staff, meaning that they're not required to work at all, and subsequently the business can claim a grant back from the government for 80% of their salary cost, up to a £2,500 monthly cap, plus the associated employer national insurance and pension contributions. It's up to the employer whether they top up the remaining 20% or pay above £2,500 for higher earners. This means it's possible to wipe out the cost of your wage bill entirely for the period staff are unable to work due to coronavirus, although you do have to shoulder the upfront cost while waiting for the grant to be issued. In order to benefit from this, the actions required are as follows. Step 1, you should notify your staff that they're to be furloughed, as this reflects a change in their employment contract. You should also notify them if their wages will change or if you won't be topping up beyond the government grant. Best practice would be to document the staff's agreement to the change. Step 2, run payroll as normal, as I'm sure you've already done for March. You'll likely need to do the same for the April pay run and foot the upfront cost of the wage bill, but you are able to apply for time to pay on PAYE if cash flow is tight. You are still required to make your monthly pension costs unless you've agreed otherwise, and you may face fines by the pension regulator if you just turn off that direct debit. So step 3, the HMRC portal to apply for the grant is expected to go live towards the end of this month and will be linked to your online PAYE account. So make sure you've got one of those and you can access it. The system won't calculate the grant for you, as we understand, so you will need to do this yourself, as well as providing additional details and likely signing some sort of declaration to confirm the claim is valid and correct. Step 4, the refund should be received shortly after the claim's made. Whilst we don't know turnaround times at the moment, we're expecting these to be issued basically automatically to ensure businesses receive the funds as soon as possible. And instead, HMRC retain the power to claw back fraudulent claims at a later date. Step 5, the grant received should be reported in your accounts as taxable income. The wage bill you've already paid on submission of the payroll will have been reported as an expense, so these will effectively net each other off for corporation tax purposes. There are still a few questions that haven't been explicitly answered on how to calculate the grant, especially on months like March, where you might have furloughed employees partway through the month. So in that case, how do you allocate national insurance pension contributions? Do you prorate the £2,500 monthly cap? It may be the case the government doesn't actually answer these questions before the portal goes live, in which case just ensure you document how you arrived at your grant figure and ensure the calculation used is reasonable and you can defend it at a later date. So if you're not covered by the job retention scheme, the next support package that might be available to you is SEISS, the Self-Employment Income Support Scheme, which is designed to provide a taxable grant to unincorporated businesses with an annual turnover of less than £50,000. So that might include some dental associates listening today. The scheme allows for a taxable grant of 80% of your average monthly self-employment profits up to a maximum of £2,500. Unlike the furloughing of employees, you should be continuing to trade as far as is possible. There are 3 main criteria to apply for this grant. Firstly, you must have filed a 2018-19 self-assessment return, which includes a self-employment or a partnership page. And if you haven't filed that, you have about 2 weeks left to do that. So make sure you get that in as soon as possible. Secondly, your taxable trading profits for 18-19 must have been less than £50,000, or the average trading profits over the last 3 years, so from the 16-17 tax year onwards, must have been less than £50,000. And finally, your self-employment profits must have been at least half of your taxable income, looking at those self-assessment returns. So you can probably see from this that it'll be quite easy for HMRC to identify the individuals that qualify just by setting up an algorithm to look through the self-assessment system. So if you do qualify, HMRC should contact you directly and you don't need to actively claim. What we expect is that HMRC will contact you. You'll be asked to complete a form to confirm you're still trading and have been negatively impacted by COVID-19. And then the grants are expected to be issued from the beginning of June onwards. The grant is taxable, so the amount received should be included within your taxable trading income for the 2021 tax year and will be subject to income tax and national insurance payable by January 2022. The scheme doesn't cover anyone who began to trade after the 6th of April 2009, as they won't have filed a 1819 return to report their trading profits. It doesn't cover directors of limited companies. And we've also had a lot of people complain that the £50,000 cap seems fairly arbitrary, especially considering there's no equivalent cap on the job retention scheme. However, most of these criticisms have been raised with the Chancellor, and we're not expecting him to change them based on his responses, which are effectively that any amendments might be leave this scheme open to fraud and might result in the grants being paid to significantly higher earners. So at the moment, this is the final package that we're expecting. So what happens if you're not eligible for the job retention scheme or SEISS? So that's where universal credit would come in. So universal credit is essentially being used as the safety net to catch anyone who falls between the cracks of the other support packages. So this could be directors of limited companies or self-employed individuals whose profits exceed £50,000, or maybe employees who've been made redundant or put on unpaid leave rather than furloughed in line with the job retention scheme. The criteria for universal credit and the amount you should be entitled to will vary depending on where you live in the country, any financial dependents, your income and savings, as well as your partner's income and savings if you live together. So if your income has dropped and you're not expecting significant government support, then it is worth checking whether you'd be entitled to anything using a benefits calculator, which is just a short questionnaire that you fill in online, let them know your circumstances, and it'll pop out with a result of what it thinks you might be entitled to under universal credit or any of the other benefit allowances. The government website to access the benefit calculators is on screen now. Just as a bit of an example, for a single claimant who has no living partner or financial dependents, absolutely no income, they could be entitled to about £410 a month under universal credit. Whereas if you're a couple with 2 young children, no income and savings, it could be as high as £400 per week. One point to note though, as I did mention, it's both income and savings that you're considering, that are considered when determining whether you're eligible for universal credit. So you have to declare any capital you hold, including liquid savings, investments, second properties. So if your income has fallen to practically nothing, but you do have capital available that you can fall back on, you would be expected to revert to your savings first before you're entitled to universal credit. So that's just a quick overview of the current government support measures. I imagine most of that was already known to you. So now we'll go into the more meaty detail now, and Aaron's going to take over and discuss how that applies to you specifically in the dental industry.
Thanks very much, Lily. Robert's mentioned on the chat to keep the questions coming in, so please do. We will. We have left time at the end to go through these, and we've also had some questions by email before the webinar that we'll cover off. Okay, so where do we stand currently in terms of NHS finances? This is obviously relevant to NHS and to mixed practices. I've been watching the NHS England website like a hawk over the last few days, and my nightmare was that they were going to come out with some guidance 5 or 10 minutes before the webinar. As far as I'm aware, they haven't. They, of course, may have come up with something while we're speaking, but this is the current position as we understand it. So in Wales and England, the Wales position is that you, for 2019-20, will get 4% credit if you're struggling to meet your target for this year. So the way that works is if you look at your 19-20 UDAs and you fall below target, then they will add 4% to see if you get to target with that 4% credit. And the idea behind that is that 4% is 2 weeks in the year. Going forward, Wales are going to pay 80% of your annual contract value on a monthly basis, and that will be between April and June. And a lot of people involved in the NHS will be familiar with the sort of complications around this and the conditions. We're not really qualified to talk around redeployment, but it does appear to be voluntary for now. And in reality, I don't think any of us saw them operating redeployment in any other way. England, the last sort of written position we had was the 25th of March. We had the now infamous webinar on the 3rd of April, which I listened to, and I'm sure many tuned in did as well. I think the feedback has sort of ranged from sort of concerned right through to something a bit more extreme. But in reality, it didn't give us too much guidance, except it did clarify a position around furloughing staff and mixed practices. And we'll be going through that in quite a bit of detail in a moment or two. We don't know to what extent England will decide to abate the monthly payments that they're making. So we don't know to the extent to which they're going to reduce them. But all the other conditions sort of stay the same. And we are expecting that 4th preparedness letter from NHS England in the next day or two. So hopefully we'll get that, and obviously we'll share our thoughts on that as soon as it comes through. In Scotland and Northern Ireland, the big news is that Scotland moved to include patient charges in calculating the monthly item of service income. So what they were doing before was paying you 90% of your average monthly of service income, but they were doing that net of patient charges. They're now paying you 80%, including patient charges. So that's generally a better position. And Northern Ireland have followed suit. They've adjusted their position as well. So the same position across the two nations. And again, we have these conditions around sort of maintaining staff available, not claiming duplicative government support, etc. We've had a bit more guidance come out from the BDA in terms of how to pay associates. So just to clarify what we're talking about here, all 4 nations have some form of condition that if they continue to pay you NHS funds, you need to provide your contractors, your associates, with some form of ongoing payment, ideally at previous levels. The BDA have set out in their finance guidance some thoughts on how you can calculate this. They've provided some guidance for March 2020 specifically, so it's worth having a look at if you're sort of doing your associate calculations now and you're unsure what figure to pay for March. For April 2020 onwards, they have sort of suggested that some form of pragmatic average approach is likely the most sensible. So we've had questions around, well, do I deduct labs, or how many UDAs do I pay, etc., etc. In reality, as long as you come up with a position that fairly reflects what was paid in previous periods, then you're going to be close to something acceptable. And in the absence of anybody coming out with something specific in terms of guidance or a calculation, as long as you do something fair and sensible and that it's documented, I really can't emphasize that enough. Whatever decisions you take in terms of paying associates, you must document what you're doing and why you're doing it. If you've done that and you've done it in a fair and sensible way, then I can't see any issue or challenges coming forward. Obviously, things like maternity pay, paternity pay paid through the NHS, you should continue to forward those on as normal. And it follows, some nations have been clear on this, others haven't, but if somebody is on maternity or paternity pay, that they receive that pay and they don't receive sort of UDA pay on top. They continue receiving maternity pay whilst they remain entitled, and then a decision needs to be made once that entitlement stops as to whether you start to pay them sort of production pay based on previous periods. Okay, so we've done a couple of these webinars now in various guises, and we've had a lot of questions around furloughing and mixed practices. And from a financial point of view, it's probably the biggest single issue that has caused a lot of confusion and a lot of discussion in terms of whether mixed practices can access both NHS funding and the CJRS government furloughing schemes. And the big problem was that Wales were fairly clear. They sort of acknowledged the fact that you may need to claim for private elements of your business, but England really weren't. And I was quite surprised on the webinar on Friday when they sort of suggested that they thought they'd made themselves clear. I think the reality is they hadn't, and they caused a lot of anguish by being unclear. The good news is that they have acknowledged that you can claim government grants in respect of furloughed workers for private costs, so the private side of your business. The bad news is that they haven't really sort of set out how. And in the absence of that, we kind of, to some extent, have to make it up. The BDA do have a view on this, which is quite helpful, and that's the sort of approach that we've taken and sort of built out. So, as we say, the problem is that there's no formula published as to how you work out what you can claim on the private side and what is sort of considered NHS and considered covered by your NHS contract payments. And clearly there's a whole spectrum here as to what approach you could take. So if you have a very, very small NHS contract, then in reality, virtually all of your costs are going to have some form of private element to them. If you have a very big NHS contract and not a lot of private work, then the same happens in reverse. What the BDA have said is that they advise using the same methodology as is used with business rates. So just to clarify on this, NHS England will pay you a reimbursement for business rates as an NHS practice. And what happens is if you're 100% NHS, then they will sort of pay 100% payment. However, if you have a proportion of private income, then they will reduce the percentage they pay based on the split between NHS and private. And there's quite a few rules as to how you calculate that split. What the BDA have said is, well, that seems a sensible place to start, and we agree with that. If you start calculating grants on that basis, I don't think anybody's going to have too much of a problem. It's just worth bearing in mind that we are expecting that fourth letter, that fourth preparedness letter, and knowing NHS England, we could get something completely different and sort of different guidance come out. But in the absence of that, we'll work to what we have. So if you are a mixed practice and you're trying to work out who should I furlough and what can I claim for those furloughed staff from central government, then there's 7 stages of the 7 stages of the calculation. So firstly, you need to identify the total income for your practice. Secondly, you need to identify your NHS gross. From that, you can calculate your private gross. Then you can calculate your private gross percentage. You then need to identify your staff costs before you can then turn to the grant. So we'll look at each of these stages in a bit of detail, just to give you some guidance and thoughts as to how they might work. And sorry, yes, there is an 8th and very important step there, which is actually doing the furloughing. Okay, so in terms of identifying your total income, the main consideration that you need to give thought to is what period you use. So do you look at your income in March? Do you look at your income over the last financial year? Do you look at it 3 years ago? Do you look at it as an average or a median or whatever else? There's all sorts of ways you can do this. And this is why the business rates calculation is helpful, because what that says is that you use the last 6 months of the preceding financial year to the claim. So to put that into perspective, if you were claiming for April 2020, then the preceding financial year is April 2019 to March 2020. And to work out your income, it would follow that you take October 19 to March 2020, being the last 6 months of the preceding financial year. So that's the process for business rates. Another approach could be to use the whole of the last financial year, so April 19 to March 2020, or to use the adjusted year. So this is the year that England will use for calculating 1920 UDAs, being March 19 to February 2020. In reality, you know, until somebody tells you otherwise, all of these approaches are sensible. It may be that one approach is, you know, there may be an incentive to maximize the private side of the business. Certainly you should not be doing that artificially, but it does make sense to consider what your split will be in terms of previous financial years. We've just had a very good question that's caught my eye as well around you know, what happens if my split this year is going to be very different to my split last year. So maybe your NHS contract has fallen considerably, or your private was sort of rocketing upwards. Again, you know, NHS England have acknowledged a pragmatic approach. So I think if you were to take a pragmatic approach to working out what period to use, then that would be acceptable. So you then need to identify your NHS gross. So you have your period. So let's say we've picked October 19 to March 20. You then need to take your NHS contract value for the period. So that would have been 1920 contract divided by 6, assuming it didn't change in that period. And then you need to include financial items. So again, this is coming back to how do you do these calculations for the business rates reimbursement. And we had one question come through earlier, which was, do I include foundation dentist costs? Our view is yes, you would need to include them. It is a reasonable position to take to say no, but I'll come on to what to do depending on where you land in a moment or two. But our position is that to work out your NHS contract value, so your NHS gross income, you take your contract and you add training grants, service costs, and salary. You, on the flip side, you exclude any items that are not considered income in your hands. So basically, these are items that you receive effectively on behalf of somebody else. So maternity and paternity pay, subsistence that you receive for foundation dentists, any superannuation changes, statutory levy, and obviously patient charges and remissions are ignored. So if you have you know, an associate on maternity during the period you're looking at, then you wouldn't add their maternity pay to your income. It's not considered your sort of contract income. So the third step is to identify your private gross, and this is really simple. Step one was to identify your total gross, so we did that. Step two is to identify what part of that was NHS. We've done that, and we've given you a very specific way of doing that. You take your NHS gross from your total, and the balance, by definition, is your private gross. Now, there may be some questions here around, well, you know, can't I get my private from my accounts or whatever else? If you are following the business rates calculation that the NHS use, then this is the way you do it. And the reason we recommend that is it seems the safest way of doing it in terms of not providing room to sort of fiddle or adjust your NHS income to suit your purposes. Step four is to calculate your private percentage. That's quite a simple equation. You take your private gross into your total gross and you multiply by 100, so that gives you your private percent. And then you need to identify your wage costs. And again, there's a few bits of confusion and some uncertainty around this, so we're going to spend just a minute or two going through it because it's very important to get this right. First of all, you need to calculate your staff wages for all employed staff, and that includes any clinicians you employ. So if you employ a hygienist, a therapist, or even if you employ dental surgeons, then you need to understand their wages. In doing that, you need to include gross wages and any other contractual payments. So if every month you are required to pay somebody a set rate of commission, or they get an allowance, maybe a travel allowance, or they've received an allowance because because of seniority or from certain qualifications, then you need to include those. But you exclude any discretionary payments. So if every year you give everybody a bonus out of the goodness of your heart, and there's no requirement for you to pay that, you can change how much you pay every year. It's not in their contract, so they're not expecting to receive it, then you don't include that. And you don't include any benefits in kind as well. So if you give people a company car, or pay for private medical insurance, things like that, then you wouldn't include that. It can be quite complicated. So in reality, unless you're a sort of quite a small practice, or you're very financially tuned in, then really this is something your accountant should be doing. But if you are doing it yourself, then the gov.uk guidance is quite helpful. When you're calculating wages for this purpose, then anybody who earns over 3,125 per month needs to have their wages restricted to 3,125. So we'll come on to that in a second or two. So employees who earn above 3,125, you restrict your wages to 3,125 for that amount, for this calculation. And here's the bit around foundation dentists. So if you agree with us and you've included foundation dentists' salaries in your gross NHS income, then you would need to include their wages in calculating the percentage of grant available. Now, it seems really counterintuitive, because the obvious question is, well, hang on a minute, we can't furlough foundation dentists, and they're very obviously NHS, so why are we including them? But for the purposes of working out the split, if you have included your FD salary as your NHS income, then you must include their wages as part of your costs. Likewise, if you've decided, or you've been advised by your accountant, to exclude FD salary in working out NHS gross, then you don't include their salary costs in working out your wages for the purposes of furloughing. Okay, so step 6, you need to calculate the potential grant that'll be available to you. So you take your wages that you calculated before, you multiply those by 80%. You then need to calculate NI and pension, and you need to do this on an individual basis. You can't do it as a group, because each individual employee circumstances will be different. And really, if you're not trained in this or very experienced in operating payroll, then this really does need professional input. You add the two together, and that's your potential grant. So what that means is that's the potential grant that you could claim if you furloughed all of your staff. And at this point, you're ignoring any top-ups. So if you're deciding to pay people 100%, etc., you ignore that for these purposes. Of course, we know that you can't, as a mixed practice, claim your sort of full potential grant, because the NHS are effectively paying for some of your staff. So if you were private only, then you've done everything you need to do. That's the grant available to you. If you're a mixed practice, then you need to take your potential grant that you just calculated and multiply it by your private percentage. So if, having done all that work, you identify that you are 45% private, then you need to take 45% of your potential grant. And if you're NHS only, then your potential grant is obviously 0, because the NHS are funding all of your staff. And finally, then, you need to identify your furlough team. One of the big complications around this is, I have 50 members of staff, let's say it's 45, 55, 45 private. I can't quite get my furloughed staff to fit neatly within that 45% amount. You need to take a sensible position on that. And we've got some extra commentary that we can share. Obviously, there's then the question of what you do around the staff you don't furlough, and they should be paid at 100%, because if you follow this equation, by definition, they are considered NHS. So they need to be paid at 100%, and their wages are being covered, in inverted commas, by your NHS continuity payments. It's quite a complex calculation. There's a lot of information there, and you would need professional input. I don't expect everybody to sort of come away from this with detailed guidance on that. We've written quite an extensive article at the link above. You can also find it through our main website, covid19-bw.com/dentists. And that goes into a lot more detail as to how this calculation works. So please do take a look at that. In terms of NHS guidance, that's the web link to their preparedness letters, and that's where we expect the 4th letter will be published. So we really do need to keep an eye on that, because they may, and I want to emphasize may, come out with some guidance that sort of alters or even completely replaces that calculation we've done. Okay, so we're just going to look very briefly at sort of forecasting cash flow, and then hopefully we've left a good amount of time to go through some of the questions that are coming through. So this slide is sort of reprised every time we talk on this subject, and we do that because it's really, really important. And hopefully by now, everybody's sort of got on board the fact that in a crisis situation, you are going to see your cash fall rapidly. And the reason for that is your income is effectively stopped, although clearly NHS practices have or can rely on continuity payments, but your costs are continuing. So you know, you still have to pay rent, you still have to pay loan repayments, hire purchase, etc., etc. So you've got to take immediate action, very, very important, in areas that you can control to preserve your cash. So there's no point in spending too much thinking about, for example, your NHS payments, because whether you're receiving those or not is effectively determined by the NHS. What you can control is things like your utility bill, or your IT support costs, or your hire purchase repayments, etc. So these are areas you need to be focusing on. Securing revenue where you can, NHS obviously, practice plan and subscription income is another area. Lowering your costs immediately and quickly, and then once you've identified the gap, plugging that gap as much as possible. And you know, we talked about sort of grants and SIBLs and different bits and pieces there. And finally, and this is something you probably wouldn't necessarily do in normal times, you must monitor your cash daily. So that means looking at your bank account on a daily basis and seeing what is happening. And finally, communicating with staff, sort of suppliers and other stakeholders. So there's 2 things you need to do in terms of forecasting cash flow. And the first is a monthly budget. And effectively, a monthly budget allows you to understand what will happen, broadly speaking, on a monthly basis. You start by creating a monthly budget as things stand. So where are you today? What costs have you still got? What income can you rely on? NHS might be a big part of that. And then you need to create a budget after any changes you're going to make. So if you do a budget and you have sort of, you know, let's say you were advertising in the local newspaper and you've decided to stop that, then your second budget would remove those costs. And you can create multiple budgets for different scenarios. So if you have a heavy amount of subscription income from Practice Plan, for example, then you might have 2 or 3 budgets. One that sort of assumes you keep 1/3 of that income, one assumes you keep half of it, and one assumes you keep 2/3 of it, for example. And what that will do is give you an overall cash movement. So it will give you a feeling for, if I look at the next 6 months, am I likely to lose money? And if I am going to lose money, how much am I going to lose? And that's what you effectively need to fund. So in that position, that's the amount that you need to go and borrow, or to receive in grants, or whatever else. And you must, when you're doing that, add a space for errors. So generally speaking, you might choose to reduce your revenue by 10% when you do your budget, and you might inflate your costs, say, by 10%. So what that means is it gives you a room, it gives you margin for error. This is going to be very fast, very fluid. There's not much point in sort of trying to forecast down to the penny and then getting it wrong and busting through zero, because clearly if you run out of cash, then that's a very dangerous place to be. The second document I mentioned was a 30-day forecast. So a lot of cash flow forecasting and budgeting is done on sort of 3 months or 6 months or 12 months. All of that is irrelevant currently, especially in sort of crisis position. It will be relevant to your recovery, and there's lots of work to do sort of as we approach the end of a lockdown. But for now, you need to understand your cash position in the next 30 days or next 60 days. And to do that, you effectively need to create a bank statement that works into the future. So you start with your bank balance today, and then you create a table in a spreadsheet, and you list all the transactions, both in and out, that you are expecting over the next 30 days, 60 days, whatever period you want to look at. And what that will do is at the end, it will tell you in 30 days or 60 days, you're expecting to be at this cash position. And clearly, if that's negative, then you have to take action. You're going to have to do something to stop you getting to that place. We do have some templates to use. It can be sort of quite complicated to do this, but a good place to start is your current bank statements. So for example, if you took your bank statement for March in a spreadsheet format, and a lot of internet banking allows you to export into a spreadsheet, duplicate that for April, and then change the transactions in there based on what you've removed or what you've added. And so for example, if you're expecting the small business grant of 10,000, then you can add that in. And that will give you a sort of projected bank statement, as it were, for April. You need to be updating these weekly as a minimum, and you certainly should be updating them anytime something unexpected happens. So you're checking your bank balance on a daily basis. If you log in tomorrow and the big payment's gone out that you weren't expecting, then you need to go and update your forecasts, because you weren't aware of that payment, and either you need to stop it happening again, or you need to change your model to account for that. And clearly this is an area where sort of your accountant can provide a lot of advice and guidance and support. There's a few questions there that we sort of cover off normally, but I'll leave them in the slide deck. And obviously, if you've got queries, you can also reach out to us. Okay, so I think for the first time in one of these webinars, we've managed to finish with a good amount of time to go through some Q&A. In sort of absence from other guidance from Robert or Gemma, I'll start picking out a few questions, and Lily, I might sort of throw a few to you if.
Yeah, I've had a look as well, so I've got some that I might raise.
Okay, we had. I'll start with one that we had by email, which was around this sort of. One of the questions was, I'm a private practice, everybody's talking about NHS, where do I get support? And unfortunately, there isn't more support coming out as far as we're aware compared to what we've had or what we've gone through. So clearly we've talked around NHS payments. They don't apply to private practices who don't have NHS contracts. If you are a private practice, then you need to be looking at SIBLs, the loan scheme. You need to be looking at whether you can get the £10,000 grant for small business rate relief. If you're in Wales, you should be looking at the Economic Resilience Fund. And the other thing I just mentioned for Welsh practices and people in Wales, Lily mentioned the Economic Resilience Fund, but we also have the Welsh Development Bank, which is effectively a state bank in Wales, are providing their own sort of version of SIBLs. And in many cases, it's actually much better. So if you are in Wales, reaching out to the Welsh Development Bank may be a good idea as well. One other question I'll answer, and then Lily, I'll pass over to you. we had a question around business rates, and if I'm closed, do I have to keep paying business rates? Effectively, the answer is yes. There's no holiday. There's no general holiday for business rates in England, Wales, or Scotland. There is a holiday for all businesses in April, May, and June in Northern Ireland. There's two things to bear in mind. Firstly, if you clearly not relevant to dentists, but retail, leisure, and hospitality businesses can access a holiday in certain situations. Secondly, it's worth looking at the empty property provisions from your local authority. So if, for example, you are in the Liverpool local authority, if you go to their website and their business rates website and look what sort of reliefs or changes they give for empty properties. The problem is that if you close a dental practice, you're in theory still occupying it because all your equipment's still there, everything's still there. You may even still be sort of running telephone triage, but it's still in theory occupied for rates purposes. So the reality is, unfortunately, there's unlikely to be any sort of formal relief. Finally, you may negotiate something with the council. A lot of councils are taking a very sympathetic view to collection. And a lot of councils are taking a sort of sympathetic view to sort of enforcement as well. So the short answer is, if you're struggling with your business rates and that you can't access one of the formal schemes, then speak to your council's rates department and see what you can negotiate. Lily, any questions at your end?
Well, since you're discussing rates, I thought I'd just quickly ask one that we've received a couple of times about if you're a mixed practice. How does that impact the small business grant? Is that considered duplicative?
That is a very good question. We've had that quite a few times. We actually talk about that on our website as well. We do sort of discuss that question. As far as I'm concerned, and this is personal opinion, they're not duplicative. And Lily, I think you would agree with that.
Well, you certainly can't apply for part of a grant, so that seems to suggest that you're either entitled to it or you're not. Yes,
and it's automated as well. So it would be particularly harsh if the sort of council dollop a sum of money into your account and then you're punished for having that. So I do think it's unlikely that will be considered duplication.
Okay, that's great. I just want to pick up another one we've had a couple of times about directors. So this is one that's been raised across many industries really. about directors who pay themselves through dividends mostly, and what support they might be entitled to if that was how they were previously remunerating themselves. So to answer that, the answer basically depends on whether you were on payroll at all as of February 2020. If you were on payroll, even if it was just to pay yourself a minimal salary, then you are entitled to claim the job retention scheme. Up to 80% of your wages. So you can furlough yourself, and a bit of guidance has been released on this recently, which says it's a bit of a weird concept to furlough yourself, especially as a director, but effectively that means you can only continue to do your statutory duties. So that includes getting accounts filed, making sure that money's paid in, and that the business can still run, but you certainly can't be doing any income generating activities if you're trying to claim the job retention scheme in respect of your own salary. The second option, if you weren't on payroll or you only paid yourself a minimal salary, so it doesn't actually make much sense to claim the job retention scheme grant, then you do fall outside the scope of the government support packages that we've discussed. So in that case, you're looking at the loans, so SIBLs or the Welsh scheme that Aaron discussed briefly, they're available, or you're reverting to universal credit as a default. So that's the general position for directors.
Thanks, Lily. One question I had through by email before the webinar was, what do I do with staff on maternity leave in terms of furloughing? So the specific scenario is that a member of staff is currently on statutory maternity. They're due to come back in June. What do you do? Ignoring the NHS complications, Lily, what's your thoughts on that?
So this has been clarified in the guidance, at least at a very high level, and they're continuing to be entitled to statutory maternity pay in that scenario. So you would pay them the SMP through to June, as they've previously been receiving. And if we are still in lockdown, or you're still unable to trade after they would be returning to work in June, then you can furlough them from that point onwards, but that point onwards only, and at that point you can claim the grant.
I've had a question, quite a short question here around whether I need to keep paying NICs and pension contributions. So I'll interpret that as meaning whether we need to pay, whether you need to keep paying the revenue, your PAYE liabilities. So if you run a payroll, obviously you deduct income tax from those individuals, and then and you deduct national insurance, and you generate a pension contribution as well. So the question is, do I need to pay that to the revenue, and do I need to pay the pension contribution over to the pension provider? Lily, what's your thoughts on that?
Yes, you do. So you're still required to fund the upfront cost of the national insurance. So you still have to pay your PAYE liability as normal. Having said that, you are able to claim, apply for time to pay on PAYE, which HMRC are readily accepting at the moment. So you can at least defer that PAYE liability. So that could push it back to after the grant has been received if you need that cash flow support. From a pensions perspective, you should still be paying your pension provider, unless you've made an agreement with them specifically. You should be paying your pension provider, or you will probably receive a fine from the pensions regulator if you just stop paying that.
Okay, thanks for that. We had a very early question around sort of working out pay for NHS associates, so paying NHS associates out of your NHS continuity payments, and there was a question there: is what is the lab charge deduction? That's a very good question, and broadly speaking, you can get in a sort of what I call a rabbit hole. So basically, an area where you get very, very confused as to what you should pay or what you shouldn't pay. Clearly, we await sort of further guidance, but my view on this is that if you are an NHS associate and over the last 12 months you, on average, netted say £3,000 a month for your NHS work, then it seems appropriate that would be the starting point to make a payment. So I wouldn't start trying to theorize what UDAs would have been delivered, or what lab costs would have been involved, or what other deductions would have been made. I would start the other way around. I'd start from the net position. What, on average, what did an associate receive net on a monthly basis over a period of time, and therefore use that as a way to pay them. In terms of, we had a question here around, are all dental practices with less than 15,000 rateable value eligible for the small business grant? The short answer to that question is yes. So being a dental practice doesn't stop you accessing that grant, so it's sort of irrelevant whether you're a dentist or not. And if your rateable value is lower than the threshold for your country, so in England it's 15,000, but in the other nations it does differ, then you can access that grant. We also had and Lily, I'll throw this one to you, it's a really good question. If you are both a sole trader with a profit below 50 grand and a director of a limited company, are you eligible for the self-employment scheme?
Oh yeah, that is a good question. It will depend on the amount of income you receive as a director. So the important criteria for the self-employment income scheme is that your self-employment profits have to be at least half of your total taxable income. So if you received £40,000 from your self-employment profits, and as a director you received another £10,000 in dividends, then you're absolutely fine, and you can still apply for that scheme. But if the salary and dividends that you receive as a director exceed your trading profits, or including any personal investment income you might have as well, if that means that your sole trader profits are less than half of your total taxable income, then you would no longer qualify, so you wouldn't be eligible for that scheme.
Okay.
Can I ask you one final question, Aaron, that we've had a couple
Yes.
of times? It's on the laying off of associates. So this is based on the part of the presentation about furloughing and mixed practices. So you mentioned the whole team should be retained and pay kept at previous levels. So does this include associates, or were you just referring to employed members of staff?
No, it does include associates. So NHS England are quite clear that they expect contractors to continue receiving some form of pay in relation to previous pay periods. I can't remember if it's Scotland or Northern Ireland. I think it's Scotland. Actually went further and basically said, if you are an associate and your contract has been terminated and you provide NHS work, tell us, because we'll go after the principal. So that seems a pretty clear answer to that, really. This is not an opportunity to be shedding associates or terminating arrangements where the NHS are paying you to keep those arrangements going, if that makes sense. So I want to be clear on this. If you say you're private only and you're making commercial decisions to adjust your team, that's fine. And you may mutually agree with associates that they need to go and do something else or want to change their contract. None of that's a problem. But if you sort of unscrupulously simply turn around and say, well, I'll get rid of all my associates and therefore can keep the NHS pay, I think that's certainly England and Wales aren't going to take a great view on that, and it looks like Scotland are going to take a very, very dim view on it. So we might have a bit more time just in a moment or two for a couple of final questions, but just to wrap up briefly, we have our dedicated website, covid19-bw.com/dentists, and I know ProDental CPD, Robert and his team, who've very kindly hosted us today, don't mind us sharing that website. So please do go and have a look. You can also sign up to our mailing list. Generally speaking, with webinars, sort of attendees would go onto the mailing list. That's not the case today. So if you do want to join our mailing list, then please do go and register at our website. And we also have a Facebook group that we link to on our website at that link, where you can sort of keep up to date. And just a final point from us, unless we've got another few minutes, then please be aware of scams. They're quite sophisticated at the best of times. There is a lot of these going around at the moment. Here is an example of an email that some of us have received, sort of inviting you to give away your bank details to claim a tax refund. It's a scam. You'll lose a lot of money, and there is a lot of this happening at the moment. So please do keep in mind, the revenue are not going to text you and offer you rebates via an SMS message. They're not going to email you and ask you to submit bank details. And likewise, we know some local authorities are asking you to submit your bank details online to claim the small business grants. There's no harm at all in ringing a local authority and checking that the link you've got is correct and that the form is the right one, and that the process you're following for that local authority is correct. Some may not do that. Some may use details they already have in file. So please don't get caught out by this. And on that note, I'll hand over to Robert just to finish up.
Okay, thank you both of you. Great webinar as ever. Lots of really useful information and loads of questions. One particular one, which is kind of pertinent to me in my clinical practice, is from Bertie. It was about a lot of the presentation was on NHS practices, which is quite right because the vast majority of people are in some sort of NHS or mixed practices. Is there any benefit in doing a specific webinar just for private people who are in fully private practice?
I think I completely agree with you, Robert. There's a lot of, it's very difficult because a lot of the sort of the talking heads in this area and the sort of the thought leadership that's coming out is very focused on NHS, and you can see that with the BDA as well, and probably quite rightfully. I think yes, we could certainly pull together something that's very private focused, puts the NHS out of our minds and just avoids any of that confusion.
That would be great. I mean, I would love to have you back. It's tough times for all of us, very tough times. We've all got to get through it. We've all just got to work together and support each other. Mm-hmm. So it's as you're saying, it's a changing sort of play. The field's changing virtually daily at the moment as to the guidance we're getting through. So I think it would be really beneficial if we could revisit this in a couple of weeks, perhaps with more of a private focus. That would be fantastic.
Excellent. Yeah, we'd be very happy to do that.
Okay. We've got a series of webinars up there. It's a plug for us. These are all free. You don't have to be members of our site or registered. You just go on and click the link as you have done with this one. Click onto our webpage or on the Facebook page is the main one. We're now booking through into the middle of May for people. We've been overwhelmed with the support we've had from our colleagues running webinars. It's been great. So thank you very much for everybody. And we will see you again very soon. Thank you so much, Aaron and Lily. Great webinar as ever. You've kept to time. I'm very impressed. Thank you so much. Hope you feel better soon. Okay, I will stop it now. Goodbye to all of you. Thank you very much.
Cheers. Bye-bye.
Thanks.